So yeah, as I was saying, welcome to our last bootcamp last week, boy, in the JPY. Hope you guys had having a lovely evening actually. Hope you guys are having a lovely evening. Hope you guys are enjoying this bootcamp. Yes, at first it might seems like okay, it's not powerful or anything, but then the only thing that I'm gonna require from you guys is what participation and practice. You understand? So I just want to emphasize something today before we even start the session. Guys, there are some things that I didn't see on the trading psychology that I need to say now. Guys, let me be honest with you with trading. Trading is like taking life seriously. You understand? When you take life seriously, there are some things that you are going to avoid doing. And then there are some things that you know that okay, you're not supposed to do. And there are some things that you know that you're supposed to do them on this day at this time for you to eat something from them. You understand? The same thing with trading, guys. Analyze having a reason. You understand? Ask yourself that okay, why am I analyzing this pair? Why am I trading today? What is my daily target? What is my trading plan? You understand? Like I said, what is a profitable trader? A profitable trader, it requires a lot for you to become a profitable trader. Actually, profitable comes consistent. You understand? Consistency needs a lot of things. Consistency, like I said, needs discipline. It needs a trading plan. You understand? It needs focus. It needs you have discipline. It needs patience. It needs okay, let me see the other one. You also need to have hope and faith. You understand that at the end of the day, you'll be able to achieve this account that you'll be busy trading. You understand? So yeah, other than that, like I said, analyze having the reason why you should analyze. Guys, please do not analyze the market without breaking it down from the time frame MN. Understand? If you trade the market without analyzing it from this time frame, like I said, yesterday I spoke about what market structure. That market structure has what different time frames. You have MN, 1 week, D1, we have H4, then H1. You understand? These are the time frames that I spoke about on the previous session. That okay, here you don't do a lot. You just identify what? Identify zones. You understand? What are zones? The turning points of the market. You understand? Then here, what do? You identify the overall direction, overall trend. What's a trend? A trend has two touches at the resistance and then two touches at the support. You understand? Here, you identify what? The minor trend. You understand? With the same properties. You understand? Then here, you identify a pattern and a wave. Then here, which means here you identify what? An overall wave. Then here, what do? You identify a pattern, comma, minor wave, minor waves, plus an entry point. You understand? This thing should be simple. You understand? Which means that okay, MN it's more about what? Identifying such things. Using horizontal lines only. You understand? That's your MN. And then when you go to your 1 week, already have identified your what? Your zones. Which means you need to do what now? Identify the trend that you see. After identifying your trend, what do? You go to your D1. D1, maybe let's say you have a structure like this now. You identify the structure here. Then after that, let me just say you have a trend, another trend here. This is the D1 one. And after that, what do? You go to your H4. H4, you look for your patterns. You understand? You look for your patterns. You look for your patterns. You look for the patterns that you look for. You look for your patterns. You understand? Then after that, what do? You focus on, yeah, these are the patterns that, and then the wedge also. You understand? You look for your wedges. You look for these things. You understand? Then you go to your H1. When you get to your H1, that's when you look for the same patterns. If they're there, if they exist, what do? You look for the entry point. Entry point, you get it at the breakout. That's how this thing should be, guys. If you're trading currency pair, this is how this thing should be. Do not stress yourself. The market moves in waves, like I said yesterday. You don't need to have a strategy to trade currency pairs. You don't need nothing. The only thing you need to do here is to know how the market structure works. You understand? So there are some things that I want to emphasize for today. The first thing that I want to talk about is what it's a trend again. It's a trend and breakout. A trend plus breakout plus what's the last one? The trend pullback. I didn't think about this guys yesterday. You understand? These are the things that I want us to talk about today. As you all know, that okay, for now we already spoke about what a trend. That we have what? We have three different types of trends. You understand? We have what? We have an up. We have what? We have a down. We have what? We have a horizontal trend. You understand? But after that, breakout, I didn't specify that much within these things. And then I spoke that, okay, these three trends have what has their own properties. You understand? Properties meaning that, okay, they also have to have a purpose of how and when they should behave. And then pullback, I didn't speak that much about it. So for now, what I want to talk about is breakout. You understand? There are some things that you need to be aware of, guys, within the market. That, okay, within each and every single trend that you're going to identify, there have to be a trend. The reason why you identify a trend is because of what you look for touches. The reason why you identify. You understand? The reason why you identify a trend is because of what you want to identify what your touches. You understand? The number of touches. You understand? Which means that, okay, why are you identifying touches? Because of you have the third. Your third is your what? It's your entry. You understand? And then why do you identify a trend again? Because of what? A breakout. You understand? Guys, do not forget the rules of a trend. Each and every single trend, do not forget the rules. Understand? Because of if you forget the rules, you won't know that. Okay, let me tell you something. An uptrend, whenever you have an uptrend, where are you looking for the breakout? Where is the breakout going to occur? Understand? Because of the market is doing what? It's moving to the upside. The breakout is going to occur where? On the support. And then which means that, okay, a downtrend, the market is going to break where? On the resistance. Instead, reason being this thing that I showed you yesterday, that let's say you have a structure like this is what you're going to identify here, and then this is what you're going to identify. This is what our support level. This is your what is the uptrend we're talking about. This is where the breakout happened. You understand? The breakout happened after what? The retouches. You understand? And then with this guy here, this is what you're gonna have. This is the structure that you're going to identify. Then this is the breakout that is going to occur where? On the resistance. Understand? So now there's something that I want to also emphasize here, something that is important. A trend inside a trend. Understand? Which means that, okay, you're going to identify an overall trend of the markets. It's not a strategy anything in trend inside a trend. Understand? So let's take for example that, okay, we have the markets doing what? We have the markets pushing to the downside. The market is pushing to the downside properly. We have a structure like this. And now we have, and then you have the breakout, and the market started doing what? Consolidating a little bit, then push to one side. So as my student, what do? You identify your trends like this. After that, identify this trend also like this. Understand? So how do you identify a trend inside a trend? Like I said, always inside a trend, there will always be a trend. If you are failing to take an entry point where at the touch of the third touch or any touch above third touch, always use this thing. What you do is that, okay, you identify a trend inside a trend. For example, let's say you have a structure like this. This is how you're going to identify this trend here. Instead, you're going to identify what? This trend where? At the zone here. Then where do you catch the entry point? You get the entry point where? At the breakout. Then you push it to the downside. Now we have what? We have this touch here. After hitting this touch, you want to catch which trend? The one that is pushing to the upside. What do? You identify the trend, this one. Like, it's simple. As long as you know the properties of the trends, it's going to be simple for you to know this guys, how they work. It's going to be simple for you to know everything. Then now we have what? We have a breakout pushing to the upside. Then now you want to identify what? You're going to catch this trade also. How you identify the trend? This is the trend you have. Then after that, what do? You catch this trend also. You catch this breakout. You understand? Because of most of you are going to be scared to take entry points because of what? You feel like it's risk or anything like that. You understand? You catch an entry point, then now you have your impulse and correction, the breakout, you push it downside, impulse and correction again, breakout. And then we have the changing point of the market. We have this. Then we have the consolidation, breakout, entry point. You understand? So there are some things that I want to get you guys used to. You understand? So always try to identify, after identifying the major trend, then you're gonna have a minor one. You understand? That minor, use this minor to advantage to look for the breakout within that minor. You understand? Look for the minor, the breakout. This is the strategy that was developed by Jason Noah, the beginner one. We call it the beginner strategy. Identifying a breakout inside a trend. Then he called it the beginner strategy. I used to use it, but then his one has a parallel trend line. But then other than that, it's fine. This is what you should do, guys. Understand? So now I want to talk about pullbacks. Let me talk about pullbacks. Understand? Most breakout within the market has our pullbacks. Understand? So let's say we have a structure like this. The market pushes, pushes, breaks, then retest, then boom. Understand? So we have a structure like what? We have a structure like this. Understand? So this is what we currently have within the markets. Understand? We have 1, 2, 3, which means your entry point is here. You have a correction, you enter again here. Then a breakout, you enter again here. Then now this is the retest. Like I said, you treat the retest as your impulse and correction. You don't need to be scared. You don't need the strategy to trade the pullback. You let the market push to the upside to come and respect this zone. The trend line, it broke. You understand? Then this trend line, it was it was your support. Now it becomes your resistance. And so the market will be coming back here to come touch it, push to the downside. Why is this thing a resistance now? It is because of, if you have something like this, the market breaks it. It broke your support level. You understand? So now the market needs to do what? Come here. Every time the market touches something and pushes to the downside, automatically it's it's your resistance. You understand? So now this thing acts as your resistance. It's going to do what? Resist the market from where? Pushing inside, but push the market to the downside. You understand? Like I said, pullbacks, treat them as your impulse and correction. So if you took your entry point around maybe this zone here, you understand? Always lock your profits after the breakout because of the market might come back. Once it comes back, you identify this thing, you take your entry point at the breakout, take profit here. Then after that, if you see that the market is pushing to the downside, what do? You continue pushing to the downside with the markets. You don't need to panic or do anything. Understand? So yeah, hope you guys are writing these things down because of these things are critical. These things are important for you to know. And then let's talk about another one. Another one, I call it what? The 3-touch rule. Understand? We have another one called what? The 3-touch rule. What is the 3-touch rule? Already you know that, okay, within a trend we have 1, 2, and 3 touches. You understand? So within the 3 touches that we have within the market, what are we looking for? We're looking for an entry point where on the 3rd touch. You understand? Which means that, okay, we should mostly look at our entry points where on the 3rd touch. You understand? So sometimes it's not useful for you. It's not useful for you to identify the trend. You understand? Let's say maybe that you are lazy or something. The only thing you can do is that you can let the market play around, and let the market. So you don't need to draw the overall thing. What you can do is that you can only identify 1 and 2. You understand? After identifying 2, you already know that, okay, on the 3rd, this area you're gonna have what? A breakout or a respect. So now you let the market come back here. If it touches, already have identified 1, 2, so you touch now, you have 3. So either it's gonna do what? Break to the upside or give us ourselves. And then if you're afraid of taking the sells, what do? Identify the structure here. You understand? So sometimes you can use one trend line, just one trend line. That will see that, okay, the market will continue bouncing on this trend line over and over again, which means that, okay, your entry points are expected to be where? Within the zones here. Within the zones here. Understand? So that's the 3-touch rule, even on the support level. If you have a support level like this, then you have 1, then you have 2, then you wait for what? For 3. And 3, either what? Look for a breakout or respect. The market respects. Means that automatically you have 1 and 2 at the top, which means it's simple. That is the repetition of one thing over and over and over again. You end up having a trend at the end of the day. Understand? So yeah, I also want to introduce you to things, which is what you call false breakouts. Understand? Guys, not to be honest, at this point, I feel like there are no such things as false breakouts. When time goes on, you'll really understand why I'm saying this. But then I won't be mentoring you guys about these things of why I don't believe in false breakouts or anything like that. But then one thing that I want to tell you guys today is about what it's about false breakouts. Understand? So we have false breakouts as patterns. You understand? We have false breakouts acting as a pattern. We have false breakouts acting as long candlesticks. Guys, false breakout in a way it's like manipulation from central banks, which are your market makers. You understand? And then you have spikes also. You understand? So some of you will tell me that okay, we took an entry point, but then there's a false breakout. You understand? So there are a lot of things that you need to do. I'll talk about entry points after this. There are a lot of things that you need to look at. So let's start with the pattern. There's a pattern that I want to introduce you guys to. Let's say you have the market pushing to the upside. The market is from where? It's from this zone here. Pushing to the upside, pushing to the upside. Then after that, what happens is that okay, it happens that okay, the market does what? The market breaks from the zone here. Okay, let me just move in. Yeah. It happens that okay. What happens is that okay, the market. Let's not focus about that. Then what happens is that okay, the market end up doing this. You understand? This is a pattern that I want to talk about. There's always this reversal pattern at the end of a breakout. After a breakout of the market, you'll always receive a pattern like this. You understand? You don't need to panic. The only thing you need to do is okay, if the market breaks your trend line and then you see the market consolidating, draw this pattern because of it's not a pattern that will allow the market to go to the upside, but a pattern that will also allow the market to go to the downside. You understand? So this pattern is always critical. I'll show you this pattern within every day, within our charts. But mainly on an H1 candlestick, on an H1 time frame, you only see what? You only see one candlestick like this. Okay, let me just draw that right there, like this. You understand? Here, on other time frames, there are candlesticks that are formed. You understand? You can find candlesticks that are forming this candlestick here, that are forming this structure here. So this is what you call what? A reversal pattern. You understand? Or a false breakout pattern. This is the pattern that I mainly look for within each and every single breakout. So long candlesticks, how it happens is that okay, you can have a trend like this. Then you can see one candlestick pushing to the outside. Then boom, you have one coming inside. You understand? Guys, do not trade the momentum of a candlestick. Trade the breakout of a candlestick. You understand? Because sometimes on H1 you can see these things. You understand? But on H4 there will be this. That's what you're gonna see on H1. Let the candlestick close outside and then let the candlestick give you what? A proper momentum. You understand? Because of this thing happens a lot, guys. There's no cheat code behind this thing. There's nothing you can do to rectify these things. These things happen. The only thing, like I said, trading is about maturity. These things you're gonna get used to them. Throughout the process, you're gonna see them. Throughout the process, you're gonna get the chance to know them. Then they won't be affecting you anymore. You understand? There's no cheat code. There's no way of solving this thing. There's no way of spotting false breakout. They okay. You understand? With or without you. So the only thing you need to do is just to be aware of them. You understand? Spikes. Automatically, what happens is that okay, you have a trend line, and the same thing as this one. You'll just see one candlestick push going out, then a few seconds later, it's going inside now. You understand? Don't be confused by these two things. Don't fall for such candlesticks. If a candlestick breaks a structure just like that, then try to move to smaller time frames to see what's happening. Because of a candlestick just can't do that. Instead, wait for the momentum to be strong, wait for everything to be strong, or wait for the pullback. If you are afraid of taking the entry point, wait for the pullback or a correction. Then that's where you can have your confirmation. Understand? Because of if you do not do that, it's gonna be painful. Understand? And then let's also talk about what entry points have to be real now. Entry points. Yeah. So I'm doing final touch-ups regarding our structure of the markets, the things that you should look for within the structure. So there are a lot of confirmations that I look forward to within the market. So the first confirmation is that a candlestick of a breakout needs to close outside. You understand? And then the second candlestick also needs to close outside. Second candlestick need to close. And then the third candlestick, that's where your entry point can be. You understand? If you have a confirmation like this, it's okay. And then also be aware that okay, let your second candlestick not touch where it broke. You understand? If it touches, it's quite risky. But then if you're fearless enough, you can enter. You understand? Because we are looking for accurate things here. You need to be patient. But then the question that I always ask is that, okay, Nasdaq doesn't wait, guys. You can see Nasdaq, boom. Then you ask yourself, where are you supposed to enter? Guys, once you enter, after entering, try to look for your like entry points, go for your smaller time frames. You understand? Go for your smaller after entering, you go to a smaller time frame. Try to see how the market is building after this. Because of what I normally do is that, okay, I enter, then lock profits. After locking profits, then I get the market put to the upside. You understand? Then I'll take my profits wherever I need to take my profits. You understand? So let the market close outside. Even if you can have something like this, guys, the market is evil. You can have a candlestick like this. Then the next candlestick, you find yourself entering here. You understand? Because of you feel like you lost the momentum. The next candlestick can come back straight to where it was. Then you lost so many pips. That's plus minus 500 on Nasdaq. You understand? So don't rush. It's either you catch the entry point inside or at the breakout. Because of you have the third touch, clearly you can enter at the third touch. And you have another confirmation, which is the breakout of the structure inside that trend. Understand? And then you also have the breakout, the major breakout of the trend or the correctional wave. So you have three confirmations. So choose one, the one that you want to go in. But then I always advise you to enter inside the trend, because of entering at the breakout of a trend, it can give you spikes, guys. Oh, it can hurt you. Breakups are difficult, but blowing an account, it's more painful. Understand? So yeah, those are the things that I needed to clarify before I enter the major key strategy. If you have any questions, you can ask me questions now.
Hello, sir.
Yeah.
Okay, I just want to double check. I was busy writing the notes on your the entry points. You said number one is close out the watch outside. We wait for the candlestick to close outside, right?
Outside the trend line or the horizontal line it broke from.
Okay, all right. And then number two was what was number two? Because the number three was my entry.
Yeah.
And then number two, what was number two?
The second candlestick needs to close
the
outside too. Yeah, which means you need to have something like this. It closed outside, then the second one also needs to close outside.
Close outside as well. Oh, okay. So we're talking about this candlestick. Second candlestick must also close outside.
Yeah. And then another thing, the danger behind this thing is that, okay, if this candlestick touches this zone here, it's quite risky for you to enter. You understand? Because it might pull inside, then continue pushing, creating that reversal pattern here. Something like
okay, yes.
You understand? So always wait for the candlestick to close outside, then you can swing the third one.
Okay, all right. All right, okay, all right.
Yeah.
All right, thank you.
Tumelo.
Sure.
Yeah, I just wanted to ask about the stop loss plan. Like in that case, like risk with the stop loss, where would you put it?
Okay. Stop loss wise, guys, I hate using stop loss, but then it's always advisable for you to use stop loss, because of stop loss has a lot of manipulation. With the current structure that I'm using to trade, I'm using 2 pip stop loss, I'm using 1 pip stop loss, because of the accuracy behind what I'm using. But then with the retail wise, if you take an entry point, like this, sorry about that. If you take an entry point like this, let's say this is your third touch, always do not put your stop loss here at this zone here. Instead, try to put your stop loss above, because of there is what? Number one, stop hunt. And then number 2, there spikes. You understand? This zone here is quite dangerous. You understand? Do not put your stop loss above your support or your resistance. Try to put it 20 pips. You understand? Try to put it 20 pips. Or 30 pips. Away. You understand? Because of if you do not, you're gonna get hurt, guys. You're gonna get hurt. You said even after the breakout, let me just show you something. Let's say we have a breakout, like this, and then the market does what? Structure breaks. Then which means your entry point is at the zone here. Try to put your stop loss where 20 pips away. Guys, there are a lot of things that can happen. You understand? Like there is no accuracy behind putting stop loss. There is no accuracy behind entry points. The only thing you need to do, like I said, is to become matured, to know when to enter and when to exit. There is no a cheat code. Like there's nothing. Market makers are clever. Those guys know how the market moves. You understand? They know how to manipulate you guys. They know how to do everything. So the only thing you need to do is be on their level. Be matured. You understand?
Okay, but I understand.
Sorry, Dumelo. Did you say that in terms of breakout, on an uptrend, you'll get the breakout at the support,
Yes.
and on a downtrend, you'll get the breakout at the resistance?
Yes.
Okay, thanks.
Yeah. So yeah, guys, let's guys learn something. I want to be personal now, guys. Market structure is the key. Strategies are just here. I'm going to teach you a strategy. Some of you are going to understand the strategy same time. Some of you are gonna take your time to understand the strategy. Some of you, you're gonna like understand and not understand at the same time. You're gonna be confused. Note that focus on market structure more often than the strategy. You understand? You have 10 minutes remaining. It's okay with me. Focus on market structure than a strategy. And then know how to trade. So we wait for the second candlestick to close which time frame. H1 mainly. I would advise you to trade on H1, guys. H1 is the best. You understand? Wait for the second candlestick. And guys, try to use your investing.com and TradingView. Trade on different time frames. Your H2, H1, H3, H4, all those time frames. Get yourself used to those things because they are nice entry points that you can catch from those sides. You can find on H1 you don't have a pattern, but on H2 you have a pattern. Then you know where to end. You understand? So yeah. Strategy, guys. Some of you are gonna not trade with the strategy, but choose to trade with what? With the skill that I gave you, which is good. Some of you are gonna use the strategy more than the knowledge I gave you. Guys, the market moves in waves, the market moves in patterns, the market moves in trends. You understand? That's something that you should know. A strategy is just something that is here to help you. You understand? Practice the strategy, know the strategy, then milk the market with the strategy after knowing the structure of the market. You understand? So I'm going to introduce you guys to what we call major key. You understand? So major key, it's Jason. Simple. I don't want to talk a lot. So with major key, yes, properties. The properties of major key states that okay, we need to have minor key. We need to have minor key. We need to have the likes of our breakouts. We need to have the likes of our pullbacks or waves. And then we also need to have the likes of our, okay, the major key. And then, okay, you identify the major key, minor, then yeah, the touches. Okay, so guys, I repeat, here you're gonna get confused because of, listen, this strategy and the market structure, these things don't go together. You understand? This guy is different, then this guy is different. This guy has his own properties, and then this guy has his own properties. Understand his properties first to understand his properties after. You understand? Because of here, things are gonna change. Okay. Chap. So we have what we call minor key. So a minor key refers to minor key. What can I say? Minor key. So how do you identify minor key? The minor key. Just write this thing down. A minor key is the second point on major key. Understand? And then major key, it's the major resistance or support, one of the two. Just, and then it only contains 2 touches. And then the breakout of waves, that's where you look for your entries. It's never gonna make sense now, but it will make sense now. So yeah, let's work now. We have major key and minor key. We have a structure like this. This here, you identify 2 touches at the resistance. The first thing, you identify 2 touches where? At the resistance or support. One of the two. This is it, which means that now this is your major key. You identify the major support or resistance. Major key has first touch and second touch. Then after that, we're gonna talk about minor key. I said on the minor key definition that minor key starts from where? Here. The second touch of your major key. Then the second touch of your major key is gonna act as your first touch for minor key. Understand? So after that, what would happen is that the market will start changing its direction from these zones here, doing this. Listen, this guy is your first point on major, on minor. Let me just, I don't know if it's gonna erase what I want to do. Yeah, this guy here, let me change the color. This guy here is your minor from this point here. So you're gonna look for what? 2 touches from your pullbacks. The third touch will be a breakout, which means you're gonna have something like this. You're gonna have something like this. So now we have 1, we have 2, then we have 3. Your 3 is a what? It's a breakout, which means an entry point at the zone here. Every single pullback you see, even if it can be a 1 candlestick, draw your minor key. Then you start from here again. You look for 3 touches. Understand? So we have 1 again. This one is going to act as 2, then 3. That's where your breakout is, which means an entry point where? At the zone. And after that, you're going to have what? You're going to have the structure here. Again, you have what? We have 1, then we have 2 here. Then 3, that's the entry point is. From there, you're going to have this guy here. Then this 1, then your 2 is here. Your 3 is the breakout, which is entry point here. Then you're going to have the breakout where on the major key, which means your third touch. Oh, nice. Now we talk. Now we're talking Forex now. That's how it is on the resistance. This is major key on the resistance. This is major key on resistance. There is a major key on resistance. Because of this your resistance here. Now, which means on the resistance now, the breakouts from minor key are gonna be what? Buys. Understand? Like the buy here, the buy here, the buy here, the buy here. So now let's go to the support. Support, which means it's gonna be what? It's gonna be a source. You have the market coming here, the market maybe going there, the market coming back, and then the market going there. And now after that, what we have the market coming back, doing what, consolidating. Let me just draw that properly. What you do is that this is your support, major support, and then this is your what? This is your major key. Again, which means major key has 1 and 2. So within this 1 and 2 that we have, your minor key is gonna start from where? The second point on major key, which means this is your 1 on your minor. So this is your minor. Your minor is gonna look for what? 3 touches. Your first is gonna be where? Your major. The second on your major. This 1, 2, breakout. 1, 2, breakout. 1, 2, 3, breakout. 1, 2, 3, breakout. So automatically, what do you have? You have your 1 here, your 2 here, your 2 here, your 2 here, 2 here, 3, breakout. So yeah, let's meet on the next session, guys. We need to talk. I know we need to talk. We need to talk. So I'll become personal. So yeah, I'm gonna send the link to the group now. So join the session as soon as you can, because I have a class too after this one. So I need us to deal with this thing as soon as possible.